Hi there, and welcome to Orbuc's weekly Crypto Signals Report briefing with me, CEO and founder of Orbuc, Ben Cooke. Orbuc's weekly Crypto Signals Report is the crypto report you can't be without if you're an individual, professional, or team that's serious about crypto. Visit orbuc.io for more information and subscribe to our Substack to receive the report in your inbox weekly. Today we'll cover our weekly review with the questions: how is the current crypto outlook evolving? How is Bitcoin currently positioned? And how are alts currently positioned? So moving to our first question, how has the crypto outlook evolved? Well, from our view, with 50 BPS cut from US rates since September 2025 and the Trump-G trade deal somewhat resolved, markets are ideally placed for upside into year-end given the rise in liquidity and near-term inflation concerns abating. However, the sharp repricing of the December US rate cut and uncertainty over the rate cut theme, soft or hard landing, has investors holding out for more economic data to confirm the thesis. Crypto will remain subdued but sensitive to this theme given its liquidity and sentiment sensitive dynamics until resolved. So let's take a deep dive into what we mean here. So as we've seen this week, last night the Fed cut rates by 25 BPS, getting us to a 50 BPS cut since September 25. The market reacted was quite muted in the response. Consequently, what's happened overnight is the market has actually adjusted its probability of a 50 BPS cut in December by quite significantly, by about 30%. So it was 90% 1 week ago probability rating, and today it was 67%. This was mainly driven by Powell's kind of neutral tone from the FOMC meeting, citing economic data as a key driver for further cuts. So what we're seeing now is a potential 25 BPS cut for December. So the market's priced that in yesterday. And very briefly, just going to our slide 9 here, we can kind of see that a bit of risk off. So Bitcoin down along with oil, as well as kind of the S&P remaining neutral. And what we saw was the dollar, gold, and both the 2-year yield, US 2-year Treasury yield increase. So there was a bit of uncertainty leading up that meeting from yesterday. Notwithstanding, though, the kind of fundamental backdrop remains consistent and the same. So we'll wait for this week for the data, as well as moving into November. So for us, there's also a point where investors will likely turn their attention to the 31st September core PCE print, the 4th of November JOLTS report, and the 5th of November ADP non-farm employment report. And basically what we think this will do is this will start to confirm and deny the directionality of any rates. And with that in mind, it's to do with this soft or hard landing. So not only is there basically some rhetoric around, also concern around the kind of degree of the cut moving into the end of the year, but also if actually the US economy is faring out well. So there's going to be a shift in this kind of sentiment, and investors are waiting on this data before pricing in any further rate cut or a steeper rate cut towards the end of the year. As a final point as well, Trump-G reached a trade deal last night, so tensions have begun to cool on that. So this is structurally bullish for Bitcoin, given the fact that it will reduce kind of the inflation concerns associated with kind of imports, exports, which goes back to the Fed's dual mandate of trying to tame inflation and also grow jobs. So there's a lot going on over the next few weeks. What we'll likely see is markets repositioning, repricing based off the incoming data. But for us, we think overall for crypto will remain subdued, but sensitive to the theme of a hard or soft landing, given its liquidity and sentiment sensitive dynamics until resolved. So moving to our second question, how is Bitcoin currently positioned? Bitcoin declined 3% for the week from 111,000 to 108,000. Indecision lingers with near-term uncertainty obscuring end-of-month optimism. Bitcoin ETF net flows gave back 550 million of gains for the week post FOMC, leaving net flows at 2 million compared to 112 million for the prior week. Futures open interest rose 9% with funding rates down, signaling rising shorts, with corporate skews reaching April lows. This is despite end-of-month optimism for tomorrow, with a 14 billion notional expiry, a 1.35 corporate ratio, and a max pain of 114,000. So let's just get into what we mean here. So what we have seen this week structurally is essentially ETF flows giving back gains from the week as a result of this FOMC and kind of rate adjustment for the end of the year. Notwithstanding, though, we did see BT exchange balances decline by 4%, which is structurally bullish. So there's a bit of indecision here from spot markets, more so as price reached 116k last week, which was a key resistance zone. We actually saw CVD, which is cumulative volume delta, start to taper off, and a lot of short covering happened as price rose. So there was basically some hollow price rise, a hollow price rise from about 114 to about 116. And as we saw this week, there was pretty much a big rejection from that, and lots of shorts piled in, getting us to where we are now. So what that implied for us is we saw some waning momentum at these levels and reduced appetite for risk and speculation at the current time. So what we're seeing there is, spot kind of taking a step back, and also um, a leverage and futures also holding back at certain levels. This is in despite the fact that there is a pretty healthy options kind of put call skew towards sorry, excuse me, corporate skew towards the end of the year. Um, and usually, what this implies is for us is what we have is a 14 billion notional expiry, 1.36 corporate ratio, and a max pain of 114k. So what that means is the market is positioned in a bullish manner for tomorrow, basically towards the end of the month, with more calls and puts. And typically, we would expect, or usually you can expect, big expiries to orientate towards a max pain price. So um, there is this kind of near-term uncertainty, but also for us as we look towards the end of the month and even towards the end of December, there is some good positioning in the options market. So it's cautiously optimistic here. And if we just take a brief view at our last night, the actual change in OI by strike, what we can see from this slide is a huge a big bias towards basically calls of 120,000 plus. So we can see actually, even though the FOMC meeting pulled through reduce the speculation levels, there are investors positioning post meeting and buying calls for higher prices. So for us, a bit of a mixed picture, and again, we'll be waiting on the economic data to see where Bitcoin can go for another month and for year end. Moving to our final question: how are alts currently positioned? Altcoins showed signs of recovery with all sectors seeing a positive return on the week. DEX led with 20% returns driven by Hype's 21 shares ETF announcement and BitGet's Hyper EVM wallet integration. Ecosystems broadly showed muted performance for the week, though on the monthly time horizon there is an increasing divergence in ecosystem performance between BNB Chain and Cosmo, with Cosmos faring the worst, 30% down 30% of the month in comparison to BNB Chain's 12%. This is a stark reflection on the importance of chain and institutional investment to support ecosystem growth. So taking a look at that very quickly. So what we saw this week, and kind of building on last week, is we did see a bit of recovery from this liquidation point, and on our kind of season indicator and alt breadth indicators, we can see that there's been a kind of healthy recovery here. So altcoins remain at attractive prices, given the drawdown in the context post FOMC. And moving to our sector view, we saw this week basically some positive returns across all sectors. So this is looking reasonably healthy. And leading that was Dex, as mentioned, and Hyperliquid has had a few announcements this week, so that's brought the index up. But broadly, what we're seeing is this is reasonably healthy, irrespective of what's happening in the broader macro context. And the expectation is over the next few weeks we'll be able to see some specific sector outperformance to start to see where the market's rotating to. But for us at the moment, on a weekly basis, we're seeing AI Dex leading performance, and on the monthly, we're seeing AI and DEX also leading. We're starting to see L2, L1, and infrastructure start to basically a bit of resurgence coming back through. And some of the sectors that we're still waiting to see some recovery from include real world assets, layer zeros, and also deepen. So moving very quickly to our ecosystem summary, which is here. For us as well, we saw pretty muted performance across the week. So Bitcoin ecosystem returned 3%, Solana just around 4%. And yeah, BNB chain as well, down 5% actually for the week. What we're seeing there is on the monthly basis, a divergence in cryptocurrency ecosystems. So what that means is, for example, we've got BNB chain, which has performed about 12% over the month, but Cosmos is down 30% over the month. And essentially what's dragging down the Cosmos ecosystem is C and INJ, which basically have failed to recover. There's the largest coins by market cap in the Cosmo ecosystem. They've still failed to recover from the liquidation event. So, and on the contrary, what we've seen is BNB chain has had a recent announcement, as we mentioned last week, about the Yeezy Labs and also the DAT digital asset treasury announcements for the BNB ecosystem. So, these two comparative points kind of performance kind of show to us that there is a real value in investing in the ecosystem and investing in institutional rails to kind of drive capital flows. And I think what we are seeing here is a very clear rotation away from underinvested ecosystems. Bitcoin, Solana, Ethereum are kind of maintaining a neutral kind of stance at the moment. So we'll see how this evolves over the coming weeks. So thank you very much for taking the time to listen today. I'm Ben Cooke, and I'll see you here next week.